We're jumping straight into Eagle NXT today. Now, if you've been watching the chart, you definitely saw that recent surge. I mean, we're talking upwards of what, 30, maybe 31.5% in pre-market?
That's a huge move. But you're right to point out that the daily volatility, that's not the real story.
No, it's not. The real catalyst, the thing that's actually driving this, is something much more fundamental. It's a proof of concept. The sale of just six EB tactical mapping drones to the U.S. Army.
Exactly. That tiny order is this massive signal. It's the market basically re-rating the future of the entire business. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves.
And we are definitely going to guide you through this because it's a highly volatile, but also a potentially very rewarding turnaround story.
There's a lot to unpack here.
There is. And before we get into the nuts and bolts, if you find this kind of analysis helpful, you know what to do. Make sure to subscribe, hit that like button. It really helps the channel out.
And we do read the comments, so let us know which stock you want us to simplify next.
Okay, let's set the stage. We have to talk about where this company's coming from, because the turnaround only makes sense if you know how low the starting point was.
Right. Let's baseline this. Eagle NXT is absolutely starting from what you'd call a trough. They saw a pretty big contraction in their legacy business.
And when you say big, you mean that 40% year-over-year revenue drop in Q3 2025.
That's the one. A 40% drop. That isn't just a stumble, you know? That's a major financial retreat. It tells you the old model was broken.
So for a small cap, a 40% drop sounds almost catastrophic. How does management convince the market this isn't just a sinking ship they're trying to repaint?
Well, it has to be more than just a name change for the defense division. It has to be a total identity shift. And that's what they seem to be executing with this dual-pronged strategy.
Okay, so prong one is the defense pivot.
Right. An intense focus on government and military sales, both here in the U.S. and internationally. That's all under the Eagle NXT banner. We're talking high-value, high-security contracts.
And the second prong?
A really focused commercial and international expansion. And importantly, they're not chasing the low-margin consumer stuff anymore. They're targeting high-value verticals.
Like energy, mining, that sort of thing.
Exactly. Energy inspection, mining, surveying, and precision agriculture. Places where their professional fixed-wing platforms really shine.
And I think what's really interesting is how they're spending their money. The R&D isn't just for maintenance. It's explicitly, growth-oriented.
It is. They are betting that the future isn't just selling the drone. It's about selling the data, the software, the integrated services that follow. That's where the recurring high-margin revenue is.
So they're planting the seeds now for growth in, 2026 and beyond?
Absolutely. But that growth depends entirely on the bull case playing out, and the foundation of that whole case really is regulation.
Okay, let's unpack that. Because this regulatory moat, it feels like the single most important part of this entire story.
It is. So their EB TAC platform, it's NDAA compliant. That's the baseline for U.S. defense contracts. But the big one, it's Blue UAS listed.
And for anyone listening, that is not just some fancy sticker of approval.
No, not at all. Think of it as the Pentagon's pre-vetted, trusted shopping list. It's like having instant security clearance for your product.
So by being on that list, they immediately narrow the competitive field.
Massively. It specifically locks out a huge number of global competitors, and let's be blunt, it primarily targets Chinese OEMs, who are increasingly restricted from anything near sensitive U.S. operations.
So those 6 drones sold to the Army. It's not just a sale. It's tangible proof that Eagle NXT has navigated the security minefield that, frankly, eliminates 90% of the competition.
That is the perfect way to put it. It validates the trust factor. And in defense contracting, trust is priceless.
And that trust has to extend to performance, right? The mission credibility.
Of course. This isn't a hobby drone. The Army needs this stuff to work flawlessly in the field. You're getting 90 minutes of endurance from these fixed-wing systems, which is really strong for ISR missions.
ISR, so intelligence, surveillance, and reconnaissance.
Exactly. And critically, they deliver centimeter-level mapping accuracy. That's the real technical edge.
Can we talk about the payloads for a second? They mentioned things like the SODA 3D and Duet M sensors. Why does that specifically matter to, say, a soldier on the ground?
So the SODA 3D is key. It's built for rapid, high-res 3D mapping of terrain. So a soldier can generate almost immediately this incredibly detailed 3D model for route planning or target visualization.
Oh, all right.
And when you pair that level of performance with the secure, compliant drone, it creates what we call functional switching costs. Once the Army builds its workflows around that specific data from that specific sensor,
It's too disruptive to change.
prohibitively expensive and disruptive, the product becomes incredibly sticky.
That makes perfect sense.
Yeah.
Now, beyond the U.S. defense market, I was really impressed by this strategy for global growth. Usually for a small company, building out a global sales team is a huge cash burn.
It is, and this is where their thinking is really smart. They struck a master distributor agreement with a company called Falcon UAV for the entire APAC region.
Which is a massive market.
Huge, projected to hit something like $26.1 billion by 2030. But instead of Eagle NXT having to hire their own sales teams in Jakarta and Sydney,
Falcon UAV handles it.
Falcon handles all the local complexity, the sales, the support, the maintenance. Eagle NXT gets to focus on what they do best, R&D and manufacturing, while scaling revenue without that proportional SG&A cost. It's textbook.
And that all links back to how they're funding this R&D, the Series G preferred stock. It's not just to keep the lights on, it's for these AI-enhanced autonomy platforms.
It is, but we should be candid about that Series G structure. For listeners, preferred stock means those investors get paid back before common stockholders.
So it's a trade-off.
It's a calculated gamble. They're giving up a bit of future upside to secure the cash now to accelerate that AI development. They're betting the high-margin software revenue later on will make any dilution today look tiny.
Okay, so we've got the deep financial hole, the pivot, the regulatory moat, and the smart distribution. How is the market actually processing all of this? Is that 30% surge just noise?
I'd call it a smoke signal, not the fire itself. It's the market recalibrating the probability of success in real time. Technically, you could call it a breakout from a bottoming base.
Right, the stock was just stuck in this depressed range, reflecting that 40% revenue decline.
And the Army contract shattered that narrative. It was the first piece of hard evidence that the pivot might actually be working.
So what we need to watch now is if it holds. If it can sustain a level above that old trading range, it creates a new floor, a new level of support.
Precisely. And that suggests the initial pop might be turning into a longer-term accumulation phase where more disciplined investors who believe the turnaround story start building their positions.
It's interesting, though, because the new sentiment score shot up to like 0.74, but the traditional analyst schools are still catching up.
And that's the asymmetric upside right there. Analyst models are reactive. They look at the past, that 40 per 3 Q3 revenue drop, and they put out conservative ratings. But the stock price is forward-looking.
So if management actually executes, there's a lot of room to run because expectations are still so incredibly low.
The bar's on the floor, exactly.
Okay, but you can't talk about reward without the risk. We have to address that. My biggest challenge to the bull case is just execution. It was 6 drones. 6. That's a tiny number.
It is, and the probability of failure is significant because now expectations have been raised. The biggest risk is that this Army order just stays a small one-off deal, that it fails to translate into sustained large-scale revenue.
And recovering from a 40% drop requires flawless execution.
Flawless. And you have to remember, the defense procurement process is notoriously slow, so there's timeline risk on top of the execution risk.
Which ties directly to the balance sheet. They're burning cash on R&D. We talked about the Series G financing. But the need for more capital is always there.
Yes, which means future dilution is always hanging over the stock. If the defense revenue is slower than expected, or if that APAC deal with Falcon doesn't ramp up quickly, they will need more money, and existing shareholders will pay the price.
So for listeners watching this story unfold, what are the key milestones they should have on their calendar for the next, say, 3 to 12 months?
Number one, without a doubt, is the next earnings report. We need to see the financial impact of that initial Army sale. But more importantly, we need the commentary, the color from management on the sales pipeline.
And on the Falcon UAV partnership.
We need confirmation that the APAC effort is actually gaining traction, that it's not just a press release.
Okay. And number 2 has to be more defense news.
Absolutely. Watch for any announcement of follow-on contracts from the U.S. Army, or potentially sales to other NATO allies. They have a partnership with a German firm, Journevo, for exactly this reason. A big European sale would be massive validation.
And the final signal to watch for.
The insiders. Monitor public data for any significant new institutional or, even better, insider buying. I'm not talking about the absence of selling. I mean cluster buying, multiple execs putting their own money into the stock at these new higher prices.
That's the strongest signal of all.
It's the ultimate confirmation that the people running the business truly believe the turnaround is real.
So what does this all mean for you, the listener? If you're looking at Eagle NXT, this is a high beta turnaround story. You have to be looking at a 12 to 24-month horizon. This is not for the faint of heart.
No, the focus has to be completely on execution. Can they turn that proof of concept into real, sustained contracts? That's it.
The market has validated the tech and the compliance. Now it's up to management to validate the business model.
Which leaves a really interesting question for you to think about. If the U.S. Army just validated this tech for secure mapping, what other allied nation, what other border security agency is desperately trying to find a compliant, high-accuracy drone system right now?
That's the lowdown on Eagle NXT for today. If you haven't already, subscribed so you don't miss our next breakdown. We'll catch you on the next one.